Hello traders and friends, welcome back to another Sunday video. Each week in the markets, what we do here is we go through some of the top trading setups that I personally have looking forward into the upcoming week. Of course, today is Sunday, so the markets will be opening later today. And in this video, what we're going to do is we're going to just talk about some ideas and some setups and things that are happening in the Forex market to keep you better informed before we jump into this week's action. So before we get too far into the video, let me just remind you, if you're newer to my channel, hit that subscribe button, hit the like button down below. If you enjoyed these videos and you want to see more of them, run that like button up. It really does help me quite a bit just to continue to make this sort of content. And let's get right into it. So let's start where we usually do. We'll take a look at the US dollar here for a moment, just because, again, the US dollar drives so many different markets that I always try and keep it on my radar in terms of things to watch, especially if you're going to be trading things like EURUSD, GBPUSD, AUDUSD, right? I like to keep that dollar on the back burner just to see what's going on. So let's look at it from a daily chart, a 4-hour chart perspective. So what we've been noticing is that the dollar last week was incredibly choppy. We saw a lot of back and forth, and we didn't really see a clear, decisive direction for the dollar. And I think what we should do here is we should just get a context check compared to the daily chart for a moment. Again, this is on these Sunday videos, I try and combine a little bit of both the fundamental side and technical side. So let's try and do that. On the daily chart, fundamentally, we've been very, very strong. The Fed has been incredibly hawkish and talking about, tapering, possible rate hikes, and kind of leading the charge compared to a lot of the other central banks in terms of monetary policy tightening. That's been the bullish story, and it's been an incredible one. It's been something that I've been net long on for quite a bit of time, but it does seem like we are now entering into a period where there's a little bit of consolidation. So if we just take a quick look here at some main levels to consider, of course, if we tag down lower here this week, there may be an opportunity, if you are a dollar bull, to pick up some at 95.5 for a discounted rate. Now, of course, you won't be trading DXY. You'll probably go take a look at individual currency pairs. But again, I like to look at the DXY to get a view. First of all, and for newer traders, I apologize for not saying this sooner. DXY is the US dollar, basically in a conglomerate form. You know how you usually would look at euro dollar or pound dollar. The dollar by itself, DXY is a way to look at it against. It's basically the average across several different currencies at once, like the euro, the pound, the Aussie, just in one chart. So it's kind of like an average. But anyways, that might be my main interest for the dollar right now. In fact, if we just draw a fib on here as well, we get our technicals going here for a second. It actually lines up beautifully with the 38.2. So I'm sitting here on my hands a little bit patiently here on the dollar because I am still bullish on this thing, but I'd love to see, especially in this consolidation, a little bit more of a discounted price before trying to go long myself. Now, that doesn't tell us a whole lot about individual pairs to go trade though, so let's go take a look at some of the main ones that may be worth considering going into this week. Of course, please remember these are my ideas. These are just my thoughts and technical ideas. This is not financial advice. I'm not here to tell you what to do with your money. I'm just sharing my thoughts. But with that out of the way, let's go ahead and say this. So I like EURUSD. Possibly for a retest of structure here. It's a little bit aggressive because the euro dollar has already fallen quite substantially, right? That play has already been made. And, the thing is, when you try and go into a position that's kind of been expired, right? Or not expired, it's been going for quite a while. You're playing a little bit of that musical chairs before things actually snap back the other way. What I mean by that is, if you have something that's just, for example, trending up and up and up like this, right? Back in early, 2020 and into 2021, the euro was really, really strong against the dollar. And so, if you were there taking trades towards the end of it, you have to be cautious because once things started to reverse, they kind of got ugly quickly. And then once they fully reversed, it turned into a whole blown trend to the downside. So I would just caution you if you're looking at things like EURUSD. Yes, this thing is in a strong downtrend, but don't be, completely blind to the idea that this thing could reverse at some point. I'm not here to, try and pick bottoms though. I am a trend trader. And so for me right now, the path of least resistance is absolutely to the downside until further notice, but I still want to take good technical entries and good, reasoning behind my trade. So maybe a 38.2% retracement retest is worth the risk in my view. We saw a little bit of rejection here, but we are still kind of just in consolidation mode. I am predominantly looking for just a continuation play. Should we get up to those levels, that may be something that kind of jumps onto my my chart or my screen, if you will, once we get a little bit more of a pushback to the upside. If that doesn't happen, then I'll just sit on my hands and not take any trades on the euro dollar. But I do like that, possibly with a stop maybe above the 50% retracement. That's risking what? Let's see, approximately. Let's say if you got it right on the 38.2, it's 75 pips. So it is a kind of a bigger risk. And if you are more of a, maybe if you're a lower time frame trader, maybe you look for some form of rejection here and you tighten that stop up a bit, right? For example, maybe you, if price pops up there real quick, you decide just to risk, I don't know, 30, 50 pips max, something like that. That actually would be probably a little bit more up my alley, as I do like to trade something like the 4-hour chart. And if you're more patient, if you're more longer term, you might trade that daily chart. But for me, I just like that 4-hour chart. Fits my schedule and my style of trading best. So we'll keep taking a look. We'll take a look at the pound dollar. Now, I'm not going to spend too much time on this one because the pound dollar has just been bleeding out. It's just been going down, 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 down. And when I look at a pair like this, you guys who are familiar with the channel, there's just not a whole lot of activity for me to do. If I'm bearish on this chart, right, which I am, I'm bearish on the pound against the dollar right now. That dollar is still so attractive in my opinion. If we're looking at this and the dollar is attractive, so I'd like to short the pound, buy the dollar. The problem is if it's just going down, 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 I'm fighting against or I'm trying to jump into something that's really kind of already been cooked. So I'm looking for, before any interest in the pound dollar, I'd like to see a pretty significant pullback. Maybe a pullback to that 61.8 is where things start to get interesting, but I'm probably not going to rush into like a 38.2% retracement trade or anything like that, just because this thing is just, I'm waiting for it to give me a proper, bullish sign pullback, right? Something that shows me, okay, bulls are here, there's some interest here, and this is going to get us into a little bit more of a premium pricing, if you will. That would be my take on the pound dollar. Maybe a pullback to that 61.8 would be of interest, as it does kind of line up with some previous structure. And fundamentally, I'm just more in favor of the dollar at this moment. So that's possible ideas for this week. And I say that, and it really could get there by Monday, right? Monday could just be right on back up to that 61.8% retracement, and maybe there's some setups there. So just be cautious with pound dollar because it can move very quickly, but I do like that idea as well. So we'll keep chugging along here. Let's take a look now at AUDUSD for a moment, just because this one has been on my radar recently. I tried taking a short here and got stopped out pretty quick on this one. So let me show you this. So I ended up shorting right around here and covering here. I'm glad I did though, because price seems to still be strong on the Aussie dollar. So I am interested in possible shorts, but I'm just going to be cautious because of this thing showing. It looks like it's tried to make a blow off bottom, right? We had this massive sell off, followed by now a lot of demand, a lot of strength here for the Aussie dollar, right? Look how many green candles here in the last like 50 bars. How many of them have been green? And the answer is quite a few of them. So I'm not super, getting into a rush to short this thing, especially since it has done quite a significant drop overall. It's like I said earlier, it's kind of like the trade has already been a little bit busy. So we're not even at 38.2% if we go from the start of this downtrend in late October of this year. So maybe you start getting interested around this zone here. This is probably more of a daily chart zone, to be honest. We'll take a look here. And yeah, you can see this a lot more clear on the daily chart there for AUDUSD. You do kind of have this level here as well, but we've sort of already taken a stab at that level, right? And now we saw it break out and retest and even hold that. So I would say that, if anything, is not really super relevant to the bearish case, at least. So when I look at this 38.2, maybe a little bit of interest. We'll have to see what happens further with the RBA. They had sort of a little bit of a hawkish twist recently, where there's more interest in buying Aussies, and also Kiwi dollar is actually up as well. Take a look at NZD USD, finding sort of a bottom, but still underperforming AUD NZD or AUD. So if we look at that AUD NZD, you can see the Australian dollar just really catching a bid here compared to the Kiwi dollar. So Yeah, this chart looks interesting as well. If you think, there's some traders who love to just trade this currency pair, right? They'll go and keep tabs on things that are happening in Australia and New Zealand and try and make a judgment call as to which way they think this market particularly is going to trade. This is a very popular currency pair. It doesn't get a lot of trading volume, but amongst like experienced traders, people love this currency pair. So, it is an interesting one to watch for sure. So let's see, we can take a look at pound yen here for a moment. We'll pull up GBPJPY. So pound yen, depending on where we're at, I'm sort of like mixed sentiment right now. You've got the S&P 500 like flying up, right? Really having a strong, solid, jump back, which when that happens, that kind of tells you, okay, well, market sentiment seems to be bullish, right? Or the expectation is strength. And I believe that, the main idea here is just less concern around the variant than people were initially expecting, which tends to be the case, I guess, recently with these last, the Delta variant and the Omicron variant, right? Markets kind of freak out and then they are kind of over it really quickly when some further data comes out. Now, if worsening data comes out for that, then of course that could cause a hiccup in markets and cause things like the stock market to come down, and honestly also that yen to get strong. By the way, quick little trick for those of you guys who like trading the yen. You can actually go to JXY. It's just like DXY, but it's for the yen. So you can go look at what the yen is up to. And my point with showing you this is if you take a look at things like NZD JPY, what you have here is sorry, I just yawned. I got tired. NZD JPY, if you're looking at this thing and you're saying, okay, if the yen is going to get stronger, if you think the yen is going to get stronger, we would actually expect this market to continue to go down as people sell the NZD in favor of the yen. Now, my caution on that is that I was very short-term bullish on the yen for about 2 weeks. I'm probably going to just pause on that and just wait for more stuff, because with the stock market bouncing up, with the concerns around the variant being kind of diminished, that was kind of my thesis initially, was just like a hedge almost to buy the yen. But because of that, I'm probably just going to stay sidelined on the yen, probably not going to take aggressive buys on it at this point, because usually in most market situations when things are, strong, I'm pretty much short biased on the yen. But right now, again, we're just going to have to see what happens with the whole Omicron variant situation. If that develops further to be, not as bad as expected, then of course we would probably expect the yen to not do well as people go back into being risk on. Risk on meaning buying things like stocks, NZD, GBP, AUD, the more risky assets that are out there in the world. So NZD JPY, if you do think that things are going to recover sooner than expected and they're not really a big deal, I would say this, maybe watch for this little counter trend that we've seen in the last few weeks on the yen to break, right? Maybe you're looking for something like this. Could be very worth keeping tabs on if you are watching the NZD JPY for a breakout. Of course, you've also got things like AUD JPY, very similar concept. In fact, this one looks more ready to try and get out of here. So you can see it's almost breaking out. So keep tabs on that if you are looking at AUD JPY going into this week. There may be, sellers in this area, but if it breaks out, there could be kind of that runaway trade setup, if you will. So, yeah, that one definitely an interesting pair right now, especially with the whole yen concept. So let's take a look at one more yen pair. I started on this one. Let me come back to it. GBPJPY. This one really suffering in the last few weeks. This thing got absolutely smoked with the news of the variant concerns. So possibly the same scenario. You may have a snapback kind of breakout trade to watch out for if things continue to look positive for the new variant and things move away from being super concerning. You get something like this, big break to the outside of this range. There could be stuff like this to look out for. So keep tabs on that. I think that, what you start doing is if you get that breakout, technically, I think it starts marching its way back up to some of these key spots on the chart. Whoops. Right. So, which, there could be an entire trade play there, right? You could say if this thing starts to break out, maybe there's retests, moves back up to 154, breakouts, 158, kind of keeping those targets in your mind. So I would just say watch for what happens with that with on the Omicron situation. If things start to look bullish in markets, I'd say that breakout could be pretty clean, right? I like that quite a bit. So a couple things to think about there. Let's talk about gold here. Gold for a moment. Gold just so boring right now. I keep saying it just because I keep pulling it up just because it's a market that so many traders are interested in. But right now, it's just not very interesting. It's just very, very stagnant, very quiet, and it's just been going back and forth. And I'll say what I've been saying for the last few weeks here. Until this thing really breaks out one way or the other of this range, there's just nothing here for me, right? So if I'm looking at gold and I'm saying, okay, I want to take a trade, and let's say that fundamentally I am bullish on gold. What I'd probably want to see is show me, yes, get to the top of this range, and I don't care to miss that move, right? What I would like to do is if it breaks out and shows strength there, then maybe a retest of 1810, maybe there's an opportunity to try and get involved on the long side. Now, if you're bearish, maybe you say the same thing here, right? Looking for breakout, retest, that sort of thing. I just need to see momentum pick up on gold before I try and take trades, because to me, the idea with gold, the attractive trading components of gold is when it's moving like this, very quickly if you're right or you're wrong, which I love. That's why I like volatility, right? Because let's say that you had a level here and you actually ended up buying this trade or buying this chart, and price starts, you have your stop loss here and price just goes in your favor and it just moves and it moves and it moves. I love that, because then you're very quickly, if you're in profit, you're not sitting around waiting for 2 weeks. The volatility is high, so it's likely going to keep moving like this. And so we had this big move back down. So there was probably trend trades to the upside on the lower time frames. Traders probably took advantage of some of the downside. So that's what I mean by high volatility. I like trading it during this time, but during this, when it's just going back and forth, unless you're like an intraday scalper or something, most traders like myself, if I was trading this, if I was long here and my stop is here, I'd be sitting in this thing. I could be sitting in this thing for 2 weeks and it hasn't even moved, right? So that's what I'm saying is I like to trade this thing when it's on the move. When it's not, I like to just pretty much avoid it. But that's just my personal approach to trading gold. I do want to say also, you guys, before we get too far into this, I want to, I guess we're pretty far into this now. Before we end this, I should say, I want to encourage you guys. We've been working really hard on the website, a1trading.com. You guys, if you head over to the site, so again, there's the URL, a1trading.com. This is our website. So what we do on the site is we pretty much cover everything going on in the Forex world. So trade ideas and setups and things like that in written form. So if you would appreciate that, if that would be helpful to you, then head over to a1trading.com. And also, we've got some free tools here that might be helpful to you as well. So you can, for example, if you want to see what retail sentiment is up to, you can see, what the euro dollar is up to, what traders are thinking there. You can also go over to COT data and see what's going on with the COTs. Plug your email in there, and we'll start sending you alerts on COT data, retail sentiment. Currency heat map is also really popular and very helpful, right? So you can get an idea of what what the currency market is doing on a broad scale. So again, check out all this stuff. It's completely free to do. Just head over to a1trading.com and bookmark the page so that you can use this whenever you trade. I use it pretty much every day when I'm trading. I just go over here and I go through these different tools. I've made them really easy to go grab, and they should be helpful to you. So without further ado, guys, thank you very much for being here today. If you got something out of the video, make sure to hit that like button, subscribe to the channel if you are new, and we'll see you back next time.